Let's talk about the oil markets. According to a poll that was carried out at the end of June by Reuters, about 37 economists saying that oil prices will struggle for traction this year for a number of issues. So the June survey, $83.03 a barrel is what they said they were seeing. And from May, it was $84.73. Let's take a look at the energy, the EIA, United States, the EIA Research Institute on Energy, saying that in addition to our expectations that OPEC plus countries will adhere to voluntary production cuts, recent disruptions to crude oil exports from Iraq and force majeure limiting crude oil exports from Nigeria have also reduced our near-term OPEC liquid fuels production forecast. This was May the 22nd from the EIA. Now, they also said further that they're expecting that these supply constraints will put upward pressure on crude oil prices. In 2024, we're expecting OPEC liquid fuel production will increase by 0.7 million barrels per day to 34.4 million, driven by an end of the currently agreed upon OPEC plus production cuts in 2023. S&P 500, they also have their energy sector returns for the year. There it is, 59%, blockbuster in 2022. However, half year 2023, down 5.4%. And for the second quarter of the year, actually, down 1.1%. So to help us get a clearer view, we have joining us from London, Dr. Carole Nakhle. She is the CEO of Crystol Energy. She joins us around the Frankfurt area in Germany. Good morning to you, Doctor. Thank you so much for joining us. So what do you make of these forecasts for the rest of the year as far as what oil prices are going to go?
Well, look, I always look at oil price forecasts, published forecasts, with a very big pinch of salt, because if you look at it historically, not even now, but really throughout the years when any organization try to publish their price forecasts, they often tend to be proven wrong, because here we're trying to look at a very big market complex where there are several factors coming into play with high level of uncertainty on the macroeconomic outlook and on the supply outlook as well, and we try to predict oil prices. So I can assure you that the track record of people predicting oil price and trying to forecast it is worse than predicting the weather. Now, in terms of what is happening today, if you look at the oil price forecast last year, you can see that there was a very optimistic outlook for this year, because everybody was betting on China post-zero COVID policy, which was abandoned in December 2022, that Chinese oil demand will come back roaring with vengeance. Now, of course, the Chinese demand is growing, but below expectations, because there are some structural problems appearing with the Chinese economy. And Chinese economy is the second largest in the world after the US, and it is the largest oil importing country in the world. So that has dampened a bit enthusiasm. And at the same time, we have the global economic outlook, the monetary policy, the interest rate rise. They have not ended. There has been a pause in the US with the Federal Reserve, but central banks have not yet announced mission accomplished. So these two important factors are dampening demand. On the supply side, as you said in the report, the EIA says this would be our expectation, subject to 1, 2, 3, 4, 5, 6, all sorts of conditions to be met. And there is also the non-OPEC supply. So US oil production, for instance, is growing faster than expectations. So if you ask me what is my opinion about the oil price forecast, I would say the current level seems to be prevailing. But honestly, I think every month's price forecasts are being revised. But I don't expect us to see a massive divergence from where we are today.
All right, thank you so much for that. So for an oil producing, I'm speaking to you from Lagos in Nigeria, which depends heavily on fossil fuel output. Well, what does that mean for a number of the oil producing nations that depend on oil and gas for revenues?
First of all, allow me to say that it is a bit disappointing, if not a little more than a bit, but it is disappointing. You're talking to an economist to see that a well-established producer such as Nigeria and many of its neighbors in the Middle East and elsewhere, that there is still, the economy is still hugely dependent on oil market development, in the sense that when prices increase, the economy benefits, and when prices decrease, the economy suffers. And I think it is really time to move away and to to break that relationship. So that in a sense, if oil price increase, that is a bonanza for the economy, but does not affect it tremendously, like in a way that everything changes accordingly. And if prices decrease, then you wouldn't suffer accordingly. So I would expect a decrease in price not to spell good news for the Nigerian economy because it is dependent on oil revenues, but hopefully the pain will not be huge because oil prices are still, in the 70s, between 70s and 80s range. That is not bad, to be honest, if you look at historical prices. So it will be less beneficial outcome than what we saw last year when prices were trading at higher level, but it's not going to spell disaster unless they continue their downward, let's say, a contraction for a longer period of time. But that does not mean that governments should not pursue economic diversification even more seriously today than ever.
Thank you so much. That point has definitely been made to the Nigerian government and the new administration that we have. Now, so that's the oil production nations, right? What about investors? As you mentioned, prices were elevated last year. We saw the S&P 500 energy sector, 59% gains, but then since that time, those gains have turned into a contraction. What do investors do, at least investors in the oil and gas space? Do they pull back in the second half of the year or diversify? What do you think they're going to be doing?
I mean, we're talking about investors. I think maybe we have here different kind of investors involved, but the performance of the sector in the stock market reflects the development in oil price. So that's why we saw, for example, after the massive contraction in 2020, when really the energy sector was underperforming in financial markets, was hugely affected, negatively speaking. But as soon as oil prices started to increase, and also add to that two important things. First of all, many major governments where, let's say, the large oil companies are located and listed became more lenient towards oil and gas investment after only, like I say, in the last few years, we were hearing them saying we should move away from oil and gas. So that boosted some confidence, gave some confidence in the market. But also you have companies themselves, like, for example, BP and Shell, changing the rhetoric that they only announced almost recently, like a year or two ago, where they said we're going to reduce our investment in oil and gas and move more to green energy. This has changed. So today you have definitely the main issue, which is prices. They easily drive the performance of the sector from an investment perspective. But you do have two supporting arguments. One, the policy change, which has been more lenient towards oil and gas investment. And second, the oil and gas companies themselves strategy has also shifted. So in a nutshell, you may see a decrease in investment in certain projects where the return is not attractive. But I would say the crisis that we saw last year has provided a boost overall to investment in oil and gas globally. But again, you have to look also at domestic conditions that will affect whether capital will come to your country or go elsewhere.
All right. I want to ask you about renewables, since you've mentioned, shifting and so on. One of the biggest, I think the biggest pension fund in Denmark, putting $1 billion towards expanding the renewable energy capacity or capabilities of one of its ports. What's your take on, I guess, the renewables conversation and energy shift and energy transition and how that impacts the markets?
Look, it's part of a global trend that is not going to decelerate anytime soon, whereby we're seeing major funds, sovereign wealth fund or other, governments, companies, bank and financial institutions, you name it, they are all putting significant sums in the green sector. So what you mentioned is just one example, because we are moving ahead with the energy transition. It does not mean that we are going to ditch investment in conventional fuels, primarily oil and gas, because the crisis, a massive rise in prices that we saw last year, convey a clear message that we are still reliant on oil and gas in addition to coal, and we still need investment in this sector. So we are seeing here, like we are riding a carriage with several horses at the same time, the green projects, which will attract more and more investment because don't forget, you're starting from a very low base compared to oil and gas. For example, just to give you a number, if you look at the global primary energy mix, or more than 80%, around 82% of world's energy needs are met by fossil fuels, which means that any other fuel, primarily green energy, you're starting from a lower base, and that will capture more and more investment. But at the moment, I see continuation of investment in oil and gas, and also even more so in renewable. You're riding a carriage driven by several horses. And that's how it should be until technology in green energy improves tremendously to meet the growing global energy demands. But we're not there yet.
All right, all right. Now, Arise News, we just over the weekend, we won an award for our coverage on women issues, the Report Her Awards. And I want to ask you about your initiatives on this side as far as women in energy, access to women in energy. Can you talk to us about why you put that together and how that journey has been so far?
Many congratulations on the award. I think it's very well deserved. I started the Women Access Women in Energy in the UK in 2007, and it started from my own observation and experience. For example, I would go to many meetings where the speaker, for example, would start the presentation saying, "Good morning, lady and gentlemen," and also experience and looking, for example, at groups that were talking only about women issues and not really bringing women to talk about energy issues. So as such, we started Access Women in Energy with the main aim to support the development of women, but also to create a networking platform for men and women alike, because I have to say our group received great support from male colleagues. And what we do, we organize regular activities, discussions, seminars, roundtable dinner discussions, even trade trips, trade missions, whereby we aim to have 50-50 representation among the speakers. So we bring women energy experts, and we really look for them quite hardly in order to share their expertise and their views on energy related topics and debate it with other men. So you'll end up focusing more on the issue, and gender doesn't matter anymore. And we've been going strong since 2007, and I'm grateful for all the people who have supported us, including our male colleagues all around the world.
Fantastic stuff. All right, finally, you mentioned seminars and so on and so forth. You held a seminar in London, I think it was last week or so, on the energy markets. Just to wrap up, can you, based on the feedback from and highlights from that seminar, and also your own outlook for the energy markets, what do you see in the future?
You're absolutely right. We had that seminar last week in London. It was a very rainy day, but it was hugely successful. We were really packed. We couldn't take everyone who registered, but I was very pleased with the outcome. And we were looking at investment in energy markets and the global energy outlook. And there was this issue. I mean, there several issues came to and were highlighted, primarily that we definitely need to pursue the energy transition quite seriously and accelerate that transition. But we also have to maintain a certain degree of realism, that we also need investment in conventional fuel, but a more responsible and sustainable investment. So you tackle issues such as methane emissions, gas flaring, look at technologies such as carbon capture and storage, because we need all the fuels that are available elsewhere. But there was another issue that was also captured attention. When we talk about investment, we're not only talking about private investment, we're also thinking about government support. And there one of our speakers highlighted the issue that many governments around the world are simply broke. They are hugely indebted. And the energy transition requires government support. Investment in green projects require government support. So we saw the generous provisions in the Inflation Reduction Act in the US. That cannot be easily replicated elsewhere, because the government has to put great support in that sense, like whether directly through giving handouts or by supporting through subsidies or tax incentives. Other governments don't have that privilege. So how are we going to overcome that challenge? It's not just the private sector money, it's also government support. So these are some of the highlights that emerged from a very rich discussion.
Fantastic stuff. We hope to have many more rich discussions with you on energy markets in the future. Dr. Carole Nakhle, the founder of Access to Women in Energy and also the CEO of Crystol Energy. Thank you so much for your time. We really appreciate it on Arise News. All right.